Hey, what's up guys, John here. Over the next 5 weeks, the entire banking system, whether it be from checking and savings accounts to credit cards, is about to get overhauled.
A growing number of bank customers are having their accounts shut down without much warning or explanation.
As well as the entire gig economy. I'm talking 55% of the U.S. workforce is going to have a really hard time with all these new laws that are coming to push out all gig workers.
The Biden administration on Tuesday issued a new rule that makes it harder for companies to treat gig workers as independent contractors.
Now, this is all happening on the back of a million different stories right now that are getting everyone's attention, all of which will likely be forgotten inside of the next couple weeks. Pay attention to what this is about to do, because what I think is going to happen next is we're going to see millions of people being forced to sell off cars, watches, main homes, second homes, Airbnbs, close down businesses. I think we're going to start to see a lot of change being forced on this economy. I'm going to break this down for you and show you exactly what's going on with 100% proof. Please hit the like button. Hit the like button. YouTube will share this content to educate the people about what's going on in America's economy. And if you'd like to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session. If you look at what happened in 2008 to 2010, banks tightened up on lending. Those with exceptional credit were able to go out there and get funding to buy distressed real estate. If you have big goals, make sure your credit is in line with your goals. Take a look at this. So this came out today, January 28th. Overdraft fees, late penalties could be slashed as White House continues the attack on junk fees. Now, who doesn't, who hates junk fees? Everybody, right? But let's take into consideration what these junk fees actually are and what this is actually going to do to America. So most people that overdraft their account don't have money, right? That's why they're overdrafting the account. So the bank will charge a $35 fee. They're lending money to a borrower of higher risk. And so when you look at this situation, you're getting a loan, $200, $300 from a bank, they're taking on a risk, right? Well, now they're taking that fee from $35 to $3 or potentially as high as $14. So they're going to reduce their profit from between 90% or maybe even on the higher end here, 75% or 60%. Now, what banks are likely going to continue doing is closing down accounts, because banks make money by lending out other people's money. And so people that are generally sitting with a lower balance are going to be higher risk of getting their accounts canceled. If you just look at some of these titles, how to keep your bank from canceling all your accounts, November 20th. November 18th, did your bank close your account without warning? Here's what you can do. November 9th, banks are dumping more customers without any warning. I mean, this is what banks are shutting customers' account over fraud, right? This is what is going to happen. We're going to start to see so many people lose access to their banks. And at the same exact time, they're now moving to hit credit card companies to reduce their late payments from the late payment fee from $41 to $8. So they're going to be reducing their profit roughly 75%. And so what does that ultimately do? It incentivizes people not to pay their bills on time, which will then increase the amount of losses that are going to be held from credit card companies. What are credit card companies going to do in retaliation to that? Likely look at credit a little bit differently. They're going to be looking at their consumer a little bit differently, who they're lending money to. People that have histories of late payments, I mean, what do you think this is going to do? It's probably going to incentivize further late payments. If the fee is only $8, some people say, hey, $8, I don't mind. I'll pay the $8 fee. But what they don't take into consideration is that one late fee equates to potentially upwards of 180 points of a reduction on their credit score. On average, what we're seeing is between 80 and 100, but it goes as high as 180 points, stay on the report for 7 years, impacting them and putting them in a position to where it's going to be a lot harder to get funding. But when you look at all these different signs that regional banks are going through and credit card companies, you can see very, very clearly that we're walking into a storm for banks. What I believe is going to be a massive rug pull on regional banks, credit unions, and so forth. Bank earnings look really bad this quarter. Here's why. Well, here's what they don't tell you. As we're starting to see shrinking consumer deposits, as we're starting to see a lot more loan losses for banks, we're also seeing this. Around 80% of all bank loans for commercial properties come from regional banks. So there's roughly $2.75 trillion of loans set to mature this year and 2027. So over the next, call it 3 years, over $2 trillion of exposure sitting just in regional banks. That's nearly half of the $5.67 trillion of loans outstanding, according to analysis. A total of $2.08 trillion of the universe of outstanding loans is backed by apartment properties. You tell me, what do you think is going to happen? Banks are going to start suffering massive, massive losses. So they're attacking their income from their overdraft fees, from the credit card fees, in every which direction. In every which direction, what do you think will likely happen? Do you think they're going to want to lend more money? Probably not. They're going to have less money to lend, right? It's so obvious, all of these things that are happening. And when you start to look at this gig economy, it is really shocking. So presently, in 2020, or in that range, 57.3 million people in total were part of the gig economy before the pandemic. It was like 2019, right? And then it ballooned 2023 to 73.3 million people. So for context, there's 132,590,000 workers in the workforce. So 55% of the entire workforce has some type of side hustle, whether it be Uber Eats, whether it be DoorDash, whether it be doing another gig, right? They're working a variety of different side hustles. They have to offset inflation. The cost of living is insane, right? But when you start looking at this situation, you can see that record high consumer debt now is at $1.3 trillion. Buy now, pay later is skyrocketing. People are really being pushed into a challenging position. And now even it's gotten so out of control that now people can take access to their paychecks earlier because they can't wait for payday, and they can pay an interest rate of upwards of 330%. So consumers are getting hit in every which direction. Well, now what is coming next is going to rock the world, especially in America. So this situation could impact more than 70 million Americans, right? And this regulation raises the bar sharply for companies to be able to treat their workers as independent contractors. And it says this rule, which takes effect, so it's not a potential, like this takes effect in March. The specific date is March 11th. This rule set to take effect March 11th, and what this will do, it's almost hard to believe, what this will do is it will force companies like DoorDash and Lyft and Uber to hire people full time and potentially offer benefits and it's going to cost them a lot more money. And so what are these companies going to start to do? Do you think they're going to want to hire people for $25 an hour? People that, otherwise they could have, working almost for free. They're basically paid a commission. They go out there, they do a win-win type of transaction. The consumer ends up paying for the product or service, and that freelancer gets a small piece of the prize, and then the other one, same thing, right? So they both kind of win together. But when you look at what would happen now, it's going to force these companies to look at this. But here's the thing. It will limit their freedom of workers who enjoy the flexibility of not being a full-time employee, as well as force employees to reduce their workforce. Women especially benefit from this type of work, and it allows them to balance their career and their personal lives. So what will this do? It's going to force a lot of people out of work. And so the conclusion that I'm coming to is when you look at where American consumers are right now, which is a more challenging position they've ever been in, and you start pushing millions of people out of work, and then you start to go after the banks and the credit card companies in which extend them lines of credit, which they desperately need, what do you think is ultimately going to happen? We're probably going to see a situation and a scenario over this coming few months where people are going to be forced into a very, very challenging position. And so what I'm betting on is when you look at what's going on in the used car market, used car prices have fallen already 7% over the last 12 months, and you have millions of cars, leases specifically, that were signed in late 2021 and 2022 at record high prices that are going to be coming due. All of these lenders are going to need to offload this inventory. A lot of people can't afford their cars right now. You're going to see a lot of cars that need to be moved. And so the only way in which they're going to be able to do that is reducing prices, meaning it's going to be a smaller demand of people out there looking to buy these cars and a lot more people that are going to be desperate to sell them. The same exact thing is going to happen as well in the labor market. A lot of people that have homes also have side hustles now. What do you think that's going to mean? It's going to mean more people are going to be forced into a challenging spot. So I think 2024, 2025, we're going to see so much opportunity for smart and savvy investors, Americans, entrepreneurs to go out there and build tremendous wealth. But they have to pay attention. A lot of people out there looking, hey, stock market's all-time high, everything is great. Look out the world. Everything is not great. Everything is not as it seems. And instead, I would argue the quite opposite. I would argue we're walking into a very, very different America, an America in which not many people are prepared for. Put yourself in the best position possible. There's a lot of ways in which people can make a lot of money today. The opportunity is for everybody. If you have internet access, you can go out there and you can learn, you could study, you can put yourself in a really, really good spot, and you could do so with very, very limited cost. I mean, this wasn't available, 20, 30 years ago. People didn't have that opportunity. They had to go to college for 4 years or 8 years. Today, you can basically learn anything for free. And so those that are, aggressive and really hungry to go out there and really make the best of it, they can go out there and they can really create a lot of value for themselves. But this situation's happening. Like, this is happening without doubt. What do you think about this entire situation, this entire scenario? Do you think we're walking into a whole new economy? Drop it below. Let's have a conversation about this. And if you'd like to fix your credit to position yourself, for a potential loan, maybe you want to get a loan for your business or a new business, or maybe you want to invest in real estate, the better your credit score, the more lenders want to lend to you because you're viewed as lower risk. So if you have any credit issues at all, a charge-off, a late payment, a medical bill, a collection, anything, foreclosure, bankruptcy, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session for Monday. We'd love to see how we can help you. And I'll catch you in the next video.